Hi, everyone. This is Ryan Smith. Welcome to ModX Network Voices. This is where we interview interesting characters in the industrialized construction space and researchers, practitioners. And today we have a treat. We're going to hear from someone on the investment or representing the investment side of industrialized construction. I'm joined by my partner in crime, Ivan Rupnik. Ivan, like to say hello to the group.
Hi, everybody.
And Ivan and I will be asking questions of Brian Sayre. Brian is currently, I'm going to get the title right here, Brian, Senior Associate. Senior Associate at Shadow Venture Capital, and spent some time putting together some research and a report in particular called Disrupt a Broken Industry. And the Industrialized Construction Sandbox. I want to get the whole title there, and we'll put the title there on the screen as well. Brian and I chatted a few times as he was doing this research, and then I got to see him present it in a webinar to quite a few folks, hundreds of folks. He's been since quite influential, and he'll tell you a little bit about his story. But with that, Brian, welcome, and yeah, tell us a little bit about yourself and how you got into this report and research.
Yeah, thank you, and thanks for having me, Ryan, Ivan. Great to be here. I've followed you guys for a while, and the content you all put out for this industry and the research you guys lead is definitely appreciated. I'm sure by the broader ecosystem, but also the venture capital ecosystem as well. So just kind of a quick about myself. I'm definitely a character, so I like that that description as you introduce your guests. I'm currently a senior associate at Shadow Ventures. We're a seed stage venture capital firm, exclusively investing across the built environment. So we look for any sort of startup technologies that can be applied for architects, engineers, general contractors, building owners, operators, developers. We're currently really building out our portfolio and have a large number of deals we're looking at. And my research in industrial construction has largely been focused on building out an investment thesis for Shadow Ventures on how we can invest and deploy capital within this space. Investing at the seed stage means we're not always investing at what is currently available, but what's coming up next. And when I look at industrial construction, I think it definitely checks that box. So a lot of exciting stuff happening within that space. And I think there's a lot of opportunity for venture to get increasingly involved as it continues to build momentum here in the short term.
It sounds like you're fairly broadly focused, so it's not necessarily housing, right? Anything real estate or construction related, is that correct?
Yeah, anything real estate or construction, and even infrastructure assets as well. So we're currently investing in a company that's doing bridge infrastructure inspections using AI and machine learning. So really the broadest spectrum of the built environment that you can apply to it.
Okay, great. So for the audience and those that follow ModX and are interested in, why are people investing in the space? Why would they care about industrialized construction? What did you, what frame did you come from in putting together this report? Why did you put together the report before we get into what's actually covered in the report?
Yeah, so I started writing this report, and my first page for a while just said, good luck. There was so many roadblocks and so many barriers, and it was good lucks in like font size 50, all caps, bold with exclamation points. I couldn't really figure out how to move the needle on any of this, because anytime I tried to insert it within the existing built environment, I hit roadblocks where it would no longer be investable because of X, or there was, you can't do it because of Y. And so what I did was I kind of threw it all out the window, and I sometimes describe myself as a millennial anarchist. And I said, forget it, forget the existing process. I think it's extremely broken. And so start it from the ground up and create a new process with industrial construction at the center of the new built environment. And once I took that framework, things really started to connect a lot more and the opportunity became a lot clearer. And when I say the existing process is broken. I think there's always room for innovation. There's always room for technology to be applied to create value within the space. But I think when we largely look at the built environment as a whole, we're not really moving the needle with anything that we're currently doing if you're taking a technology and applying it to the existing process. Not to pick on them, but if you look at like Autodesks and Procores, they've brought digital technologies to the existing process, but we still have massive labor problems. We still have cost overruns, and we're still extremely inefficient and really not that productive. So what is the problem with all of that? Well, it's not the technology that's the problem. It's the process that they're inserting that technology. So that's kind of the framework where I approach industrial construction. And when I look at it, I say, it's a brand new process that can really kind of actually disrupt how we design, build, and operate going forward.
That's great.
It's great to have a refreshing perspective because well, Ryan and I are both architects and we speak to a lot of manufacturers and contractors, but the built environment's it's a problem and an opportunity. It's obviously much bigger than any one discipline. And so it's interesting, for example, maybe just to start the discussion, we've seen, we've described what we call the McKenzie Effect in our work, which is that since the first McKenzie report, a lot of people that could care less about construction. In fact, I think they viewed construction as the backwater of the economy, even though it's a big part of the economy, especially in the US, all of a sudden became a kind of darling topic. So that's the good side of the McKenzie report. Maybe the problem is that the McKenzie report promises certain kinds of productivity, economic gains, if we apply a certain technological principle, and where it sounds like we're all aligned in this call, and I would say that the folks at McKinsey would agree, but maybe we didn't emphasize, is that actually we can't see those benefits only through the application of technology, but through a difference in understanding how we also invest in construction projects. And that's something we were surprised that a consultancy like McKinsey, which their bread and butter is supporting capital intensive investments, didn't make that crystal clear, is that the financing structure of manufacturing is just inherently different than construction, at least construction, particularly in the US. How do you reconcile those two basically kind of diametrically opposed logics of investment, the typical construction speculative in and out versus any manufacturing process or even retail where it's long-term investing? You get those big profits, but you also have to make long-term plans.
Yeah, so I think the short and sweet answer is there's a lot of different forms of capital out there that can be pulled and levered for different ways for different sort of investments. I don't think there's a one size fits all answer for this, but I think for all of those kind of institutional investors, so venture capital, private equity, investment banking, there's opportunities for each one of them to play and support this space in their own way, still fitting in the verticals that kind of fit what their investment thesis should be. Kind of looking at maybe three different buckets within that. There's the physical asset themselves. So what are you actually building and constructing? There's the factories that are actually doing the manufacturing. And then there's the technology that's supporting that entire ecosystem. When I look at the factory space, I actually don't think that's that right for venture capital investment. There's a ton of upfront costs that go into building out a factory. There's a lot of long-term operating costs that need to be accounted for. And the scalability of it doesn't line up with what venture capital typically invests. I do think it's an extremely valuable space for private equity or for investment banking. I've seen recent traction around the SPAC market, looking at investing in the factory space, where they can really get the amount of capital that they need to build out the capabilities that they need within those facilities that venture just can't provide. It doesn't make sense to do a seed stage investment in a factory where it's a $1 to $2 million check. That doesn't move the needle for what they need to do, where they really need $50 to $100 million to even get started.
Brian, do you have a good negative example? This is awesome, and I wish we could actually real time scroll some of these points, because we like glorious failures on this podcast and in our research. Do you have an example of a kind of a misalignment of a certain investment in a factory, for example, venture capital going into to support a modular factory, for example, and that not working out. That sometimes helps people visualize the kind of concept that you're delivering to us, which seems really useful.
Yeah, I'd rather not call out those companies by name,
okay,
because some of them
maybe
are still around.
Describe the situation, but describe the situation.
Yeah. So there's situations where within the modular space, I've seen quite a few manufacturers there's a lot of talk right now, right? To get venture capital funding, you need to sell a grand vision, and that vision needs to align with how I'm going to build $1 billion company. It doesn't necessarily align with what you've actually been able to execute on or what you've been able to deliver. So it's a lot of smoke and mirrors out there, and it's a lot of red flags. We get pitched by modular startups all the time, and I could take off the names of those companies and every deck would look the exact same. Where I think the dirt kind of hits the road, or the rubber hits the road, is who's actually been able to deliver on anything. And the problem with that, when you look at a venture perspective, we're impatient investors. If we're going to invest in you, we want to see you start putting that money to work. And we want to see that money being put to work and increasing your revenue to get you ready for the next round where you're going to go out and raise more money and add more money to your valuation. Not spending 3 years building your factory, bringing in any new clients and not making any traction on your revenue. So we're really impatient investors. And the reason for that is because we have impatient investors in our funds and we've promised them a certain return. So we have expectations that we have to meet. That's why we like technology and software, is because it's scalable in a different way.
Yeah. Related to that, Brian.
And so you mentioned, sorry, so you covered the manufacturers, but so where, sorry, just to finish out the typology is really clear. So you talked about where, manufacturing, but in terms of supporting sort of larger projects, is that where a sort of different style investment or approach makes sense?
Yeah, so I mean, I think the actual real gold within this entire space is the data that you're going to be able to generate from industrial construction. You're removing variables, you're increasing transparency up front before a project ever even kicks off. So I bucket those into 4, and this goes across all real estate assets.
Data makes modular investment friendly is the tag.
Yeah,
sorry,
we're gonna get this is where
make it simple and clear for the people that don't listen to us. Maybe they'll listen to you because you come from finance.
and I think this will go into where venture capital can play within this space. But I kind of bucketed it in within 4 big buckets around where industrial construction can provide a ton of value to, again, across all real estate asset types. It's before a project ever kicks off, we can more accurately tell you how much is it going to cost to build this building without the need for change orders, without the need for material changes and those unexpected costs that always pop up on projects. We can tell you how long it's going to take you to build it, and in theory, deliver it faster so you can start generating revenue earlier with that project. We can tell you how much that building is going to cost to operate because we've built that box before. So we know what its efficiency and its performance standards are going to be. And last, we can tell you how much money it can make based on what sort of configuration and what use case you're using it for. So if you can answer all 4 of those questions on the first day before you ever break ground, you're de-risking commercial real estate or residential real estate, the entire development process, in a way that I don't think's ever been seen before. So that to me is really where, that's why this space makes so much sense. You're removing uncertainty, you're increasing transparency, and through that, the data that you're going to be able to capture through these manufacturing facilities can completely change the way that we actually develop and underwrite and finance projects going forward.
That's wonderful.
And that goes to where venture capital should be investing.
No, it's wonderful. It goes to the point that not only does modular make offsite construction, make data culture more possible, it demonstrates the need across the construction sector for data, for demonstration of value, if we're actually going to have investment in construction broadly, whether that's on the software side or manufacturing side or process side.
And that's what excites me about the venture capital space within all of this, is there is a very clear intersection that begins to emerge between construction tech, fintech, and insure tech. where you can apply those different data streams to create completely new business models using that and creating value out of that data that haven't ever been done before. And that starts to enter into the SaaS-based business models and the things that venture capital can really get their teeth into. And that's where I think the VC will actually play, is supporting the surrounding ecosystem around all of this, around supply chain, around finance, around insurance, around design, and the kind of supporting software infrastructure that's going to be needed to move this whole industry forward.
Revelations, things that you couldn't foresee before doing this research and writing this report that you now know. This is important for people who are trying to invest in the space or are new to the space, but it's also important for existing players to realize that when an investment type is looking at the space, here are the things they're really concerned about, or the value that they're seeing in this industry. What are those revelations? Good and bad would be really helpful.
The bad, I was shocked at how old modular manufacturing is. So I'm not from this industry. My background is largely in corporate venturing and corporate innovation. So working with Fortune 500, Fortune 1000 companies kind of across the spectrum on partnering with startups. So I took a very much an outsider point of view to all of this. So a lot of this was new, but just how old industrial construction actually is, and its ability to really catch on in the past, because it's come up before. It is, I think, probably the biggest shock that I came across with all of this, and probably the biggest red flag and warning is, why hasn't it in the past, and what are those kind of what are those lessons that we maybe learned in historically that we could look at going forward that could maybe kind of change things.
That's great. Yeah.
But one of the issues, though, that you described, the ability to empower sort of different agents in the construction space to operate in lean ways, both not just the manufacturers, but developers, even a homeowner, even just the idea that you get your second home, even a second homeowner getting your second home in a season earlier, those are the things we've seen in other industries as valued. But as you've described, the problem of not seeing revenue being generated on the one hand, and the problem of needing to invest in really both software and hardware, as well as human resources, in an industry that hasn't invested ever, or at least not in the last 50 years, still seems like one of the biggest obstacles, particularly in the US. So we're either seeing, companies promise to skip all of that and use technology that hasn't even been commercialized in more mature markets on the one hand, and really, creating a mess. And on the other hand, we see a lot of players that are just, they don't want to invest in that. They see it's too risky. And so but if they don't invest, they're not going to be able to generate data. They're not going to be able to, forget even the automation. They're not going to be able to tell you even how much their actual costs are, or the revenue streams, or what they can offer a client. So how does that, I think the building up, scaling up of the industry, of the players, of the manufacturers, is a big obstacle in the US market that we've seen in other countries sort of de-risk through some kind of public support, or through large players that lobbied the industry at large and created a standardized and de-risked platform. We haven't seen that in the US.
Yeah, I think there's the kind of the water and the tide rises together. It's a slow process. I think it's probably still a little immature compared to where a lot of investors want to be, because there's a lot of risk associated with it. And we've had, we're seeing more and more investments come in, but at the same time, we're seeing not so good investments on the return side. So those always scare new money away from the space, I think, somewhat. And I also think the technology follows, right? So the manufacturers need to prove out their models first and prove that they can manufacture and create scalable, sustaining businesses. From that, then they can actually create an ecosystem where startups are going to feel more comfortable building software specifically for them. If you're trying to build a software for the modular space right now, and that's the only customer you're going to serve, you're going to have a tough time scaling, because there's not a lot of them out there that are going to be good customers for you. So it's definitely a challenged space. I think the companies that get me the most excited are the ones that are kind of taking a novel approach to all of this, and are kind of saying, forget you traditional developers, and are looking at vertical integration. and are saying, we're going to go out and prove it and we're going to develop it ourselves. I think there's a lot of value to that. Main reason is you're not commoditizing yourself. If you're just going to build boxes or build wall panels, eventually you're going to become a commodity product. So how do you differentiate and how do you continue to drive value up the entire supply chain? Well, if you can build cheaper and you can build faster, those are really good economic development incentives that really align well with what developers look for when building out a pro forma.
Right. Brian, you've hit a lot of points that we have talked about in ModX Network Voices. This has been a really wonderful discussion about this. I'm going to put a link to Brian's report within this and in the YouTube link. If you could go visit that. And then how can people get a hold of you, Brian? Where are you going to be so that they can get your support, get your help, or ask you questions?
Yeah, so I'm taking the dive and I'm joining the modular space myself. And starting on Monday, I'm joining a new modular manufacturer out of North Carolina called Builds. So I'm making a switch. I'm leaving the venture space. It's been an awesome ride, but the calling was too great, and the opportunity to go get operational experience with a company that I think has built out probably the most advanced automated manufacturing facility in the country was too good of an opportunity to not say yes to. So probably the easiest way to find me right now is going to be on LinkedIn.
Great. Thanks, Brian. Thanks for coming. Appreciate your insight, and we hope to have you back with your new company on ModX Network Voices.
Sounds great. Thanks, Ryan. Thanks, Ivan.